Well, good afternoon and welcome to FT.com's latest live Q&A with me, Claer Barrett. I'm the FT's personal finance editor and I edit the weekend money section. So I'm coming to you live today from my living room in Hackney. As you can see around me, we're all working from home at the FT at the moment. I'm sure you are too. But that does not prevent us from listening to all of the problems that you're having with running your businesses, claiming help from the government's various support schemes and trying to get through the current crisis. And we are here, we hope, to give you as much advice and support during that process as we can. Now, over the weekend, we published various different articles showing how people are finding accessing help from the various avenues. And the bad news is that lots of people are falling between the cracks of the various help schemes, and the government at the moment doesn't seem to be prepared to budge. But the good news is that lots of commentators, including me, are out there fighting for more to be done. So I'm going to start today with a summary of the main things that readers have been getting in touch with me over the weekend about. We have, of course, got the live YouTube questions, so you can post a question, which I'll answer. I've got an iPad here, which magically the FT video team is able to send me your questions on here so I can see them and respond. So either comment at the bottom of the article or on your YouTube questions, and that question will get to me, and I'll be online for just over half an hour today. So since the last Q&A that I did a week ago, there's been a renewed urgency in the communications I've been getting from readers, all of you out there watching, about what they're going to do about their businesses. So just to summarise those key groups who are currently excluded from the help schemes that the government has put in place, most of the people who are getting in touch with me are the newly self-employed. There's people who've been self-employed for less than a year. Ironically, the new tax year starts today. And even if you've got 1 year's worth of tax records, that won't be enough for you to claim help under the government's self-employed scheme. They want people to have already filed a 2018 to 19 tax return, self-assessment form, and they will be contacting you to apply for the self-employment grant assistance if you are eligible. And to be eligible, you need to have trading profits of less than £50,000 per year. So that's the second group of people who are excluded from the government help schemes, self-employed people who have a profit of more than £50,000 per year, some of them by very marginal amounts. I've had lots of really heartbreaking emails from people who, over the course of 3 years, where the average is worked out from, are earning just above that, 51,000 in one case, which means you won't get any support, whereas if you're earning 50,000 or less, you could technically qualify for up to £2,500 per month for 3 months, backdated until March. So that's the first two groups. Now the third and the most significant group of people who say they're not being offered very much help by the government are the directors of limited companies who pay themselves predominantly via dividends. Now, the government scheme doesn't recognise dividend income as income. It recognises it as an investment income. Now, nearly 300,000 people have so far signed an online petition at change.org asking for this to be addressed. Most of them directors who believe that the dividend income, the way that they take income from their companies, should be recognised. Lots of them are pointing out they have to trade as limited companies in order to get work from other bigger companies. It's not something that's being done to massage their tax contributions. And small business groups and also trade unions such as Bectu, which works on behalf of people who work in the TV and film industry, are stepping up their lobbying. Now, there has been some movement since I last came on screen. Some of the rules have been tweaked about the business interruption loans in particular, and the government has clarified the rules of some of the support schemes in the last week. But the biggest question that's been coming into me from readers, particularly those self-employed or limited company directors who consider themselves to be self-employed, the big question is, could there be more to come? Could the government tweak things again to include some of those excluded groups within the support scheme? So just to give you a flavour of some of the questions and comments I've had, FT reader RIW, using his initials, says, I cannot understand how the self-employed grant is fair or how the £50,000 cut-off figure was arrived at. If you earn a little over £50,000, which is hardly a fortune, you can go just as broke as someone who earned a little under. And that cut-off, of course, does not exist for the PAYE furloughing scheme, which could technically pay out £2,500 a month to PAYE staff who are earning way more than £50,000. Now, FT reader Timo, another self-employed person, emailed to say he doesn't qualify for self-employed help as his profits were above that figure of £50,000. Now, he comments, both of my staff have been furloughed, but I am left to keep my business running on the income of £96 a week, which is the amount that you can get through universal credit or statutory sick pay. He says, this scheme is grossly discriminating against the self-employed. I have friends, a couple who jointly earn in excess of £100,000 who are both paid via PAYE. They have been furloughed, so their income is £5,000 per month. Meanwhile, I have the same, if not higher, level of outgoings, which is a big problem for people who are writing in, and no income to cover them. So, as I said earlier, by far the highest volumes of emails and messages that I've had have been from owner directors of limited companies. Now, they span all kinds of sectors. I've heard from mortgage brokers, from architects, from landscape gardeners, from people who work in more traditional trades, electricians, plumbers, carpenters, builders, people who need to have a limited company status to protect them from any future legal action. That also, ironically, includes small firms of accountants who are having to field all kinds of calls from worried clients, but at the same time, their limited company structure means that they are paid via dividends and also unable to access help. Now, a big group of them have got together. They've started a hashtag on social media, hashtag Forgotten Limited, where they're all telling their stories individually of how their businesses are being affected. That's definitely worth checking out. And they're demanding equal and fair support for all taxpayers and encouraging people who are limited company directors to write to their MPs and lobby for change. Well, another person who has been speaking up over the weekend in support of limited company directors is John Redwood, the Tory MP for Wokingham and also FT Money columnist. Now, he has published a blog post over the weekend, and he's urging the Treasury to include the newly self-employed in its scheme, up the earnings limit for the self-employed to above £50,000, and the crucial one, to take directors' dividends into consideration when giving people support on their income. Now, Mr. Redwood says the government needs to offer downloadable, simple forms now that permit people to apply for money on a self-certified basis with adjustments made later in the year. Now, what he gets is the urgency that businesses need assistance, and that urgency is coming through to me loud and clear in all of the emails and messages that you've been sending me. Now, this idea of self-certification is quite at odds to the system that government has proposed at the moment. It basically would mean we'll give you the money first and ask questions later. Now, that would undoubtedly save more businesses, but it would also be more expensive, require more taxpayers' money to be paid out. And the government would then have to direct resources after the event into auditing, checking, making sure that none of those claims were fraudulent. We've already heard from the Chancellor that he's worried that there would be huge opportunity for fraud if the rules of the scheme were relaxed. So could they, for example, threaten absolutely huge penalties to anyone who was caught abusing the rules? That would be one way around it. And another point that John Redwood makes in his blog is that he's hearing from lots of constituents who run their own businesses who are very concerned that the scheme for furloughing PAYE staff is not yet properly up and running. We know it's coming, but there's going to be a delay, obviously, in between the businesses applying for the financial support to furlough their staff on 80% pay. And there's still, as of today, isn't any form that people can download to apply from that. The scheme itself is being set up. Businesses will have to pay their staff and then claim the money back. It probably won't be until May when they will get the money. Now, Mr. Redwood says the government needs to speed up the applications and decisions on the furlough scheme for businesses. Otherwise, more companies will conclude that they have to make people redundant to save costs. If you want to read any of the things on his blog, you can find it online at John Redwood's diary. Now, the government's position on all of this, because we have contacted the Treasury today, essentially there's no movement that I can report back to you on owner-directors of limited companies as things stand. The FT understands that much of this boils down to the complexity of separating dividends that somebody would receive from their company from dividends that they might receive from other investments, like shares in BP. Although you could be really mean and say, well, with the extent of dividend cutting going on in the FTSE, there aren't really all that many dividends as shareholders to be excited about right now. So the self-employment help scheme, it's important to know, is largely self-automated in the sense that because the government has built in that time lag, they know who is going to be entitled to claim for help, and they will be able to approach the self-employed. So you should look out for a letter in the coming weeks asking you if you want to apply for that assistance scheme, and then you put your application in. Now, if you contrast that with what the limited company directors are saying, quite rightly, well, we can prove by showing our company accounts or a covering letter from our accountants or an SA 302 form that the dividends that we're receiving are from our own companies. We can certify that. But obviously that would involve people sending a lot of information back the other way to HMRC saying I'm entitled to claim. And all of this, of course, builds in more time, more administration, a longer wait. Even if you qualify for the self-employment help scheme, you've got to wait until early June, the government is saying, for the money, which frankly is going to be too late for some. And the government has also reiterated its position that company directors who want to furlough the small PAYE element of their pay can do that. They can still perform their basic functions as a director, but no more. So you could technically use that payment of normally around £700, £800 people put through as PAYE if they're a company director. So you could get 80% of that, but you would have to furlough yourself and kind of put your business on ice. Now, this is a point that Martin Lewis, the money saving expert, has picked up, and he's been arguing today that the government should consider to tweak that requirement for limited company directors to distance themselves from the business. Now, that would bring that scheme in line with the rules of the self-employment income protection scheme, where sole traders are still allowed to seek work even when they are receiving income from the government. Now, Martin Lewis says a tweak to the guidance could allow limited company directors to continue to communicate with their clients and get work ready for when their furlough ends so that they can restart at speed. Now, I'm sure everyone would agree that is what the economy needs. So this whole topic, as I'm sure you will imagine, has generated a huge amount of reader debate, and it's also generated some direct questions. So I'm going to start off today with a question from FT reader Joss. If you want to ask a question, either put it on the bottom of the article or write it in the YouTube comments, and that will get sent to me, and I'll do my best to answer it. So let's start off with Joss. So Joss says, I run a small business, Claire, but my commercial landlord insists on charging us 100% of our rent, even though our building is closed. What can we do to apply pressure? Well, I'm going to take a sip of water, Josh, before I answer you on this. All this talking gets to you. So the short answer is, with landlords, you've got to negotiate, and you are maybe in a better position than you think, because if your landlord says to you, well, you've paid your rent late, I'm going to kick you out, this begs the question, who are they going to get in? Now, at the moment, the residential property market has effectively shut down because you can't do valuations, you can't do viewings, etc., etc. Same technically applies to the commercial property market. So if that happens and they get the space back, then the landlord's going to be liable for the business rates on that unit as well, under the empty rates rules, which is something they're probably not all that keen to take on. And also look at the situation with where rents are likely to go in the event of a recession. I've been reporting on the commercial property market for more than 20 years, and I can tell you, as soon as a recession bites, the first thing to start falling are commercial rents. Now, your landlord would have agreed a rent with you in happier times if they can negotiate with you to maybe defer part of that payment or give you a rental window or 50% rents for a while, they're still going to be getting more back than they would be if they took the risk of emptying the unit and trying to find another tenant. Now, of course, commercial landlords have got big pressures on them as well, not least pressure from the banks who they're lending from, and they won't want to, they want to do everything they can to secure as much income as they can. Now, I spoke to a property lawyer earlier about where you would stand in terms of the terms of your lease. And unfortunately, by the letter of the law, landlords can almost certainly oblige you to keep paying, no matter what has happened. Normally, if there is a rent suspension clause specified in your lease, it will be to do with something like a catastrophic failure of power in the building, or a flood, or a fire, or something like that. Similar terms and conditions, in fact, to business interruption insurance, which all kinds of businesses are finding just won't pay out either under the coronavirus. So although you can't go back to your lease and say contractually we feel we're not obliged to pay, negotiating clearly is in the interest of both parties if you can try and do a deal. And I would love to hear from any readers out there who have either started negotiations with landlords or are trying to do that. Let us know how you've got on. Now, another group of people who have got in touch with some comments are the over 50s. Now, the FT demographically has lots of readers over the age of 50, and lots of them have been getting in touch to say that they are newly self-employed. They have been either offered redundancy from their employers that they've taken, or perhaps jobs have come to an end and they've thought, well, setting up a consultancy, that's the way that I can make things work economically. And then obviously if they're newly self-employed in the past year, then they don't have the accounts needed to prove that they can qualify for the government's self-employed income protection scheme. So one reader, Sensible Questions, says, for many people who are aged 50 plus, who've been employees for 30 years and have paid huge taxes in their lifetimes, it's virtually impossible to get a full-time PAYE job. So they are forced into self-employment to limit their liability rather than to pay less tax, and perhaps use a company as their self-employment contractor. And I've got another comment here from the Ferryman, who says he runs his own limited company. He doesn't qualify for any help on the income he receives from dividends. And he says, while taking a swipe at the self-employed, the Chancellor does not seem to discriminate against corporations which have been minimising their taxes over the years via every loophole known to man, including offshoring profits to low tax jurisdictions or aggressive transfer pricing schemes. He says, I would love a permanent job, but it's not so easy for older workers in some professions. Hence, self-employment is literally the only option. Well, some interesting comments there, and keep them coming in. We've got another 15 or 20 minutes left to go. I'm just going to refresh my screen so that my laptop doesn't fall asleep and prematurely end our broadcast. So, I'm just going to take a minute to have a look at some of the questions that have been coming in while I have been talking. Unfortunately, there are some about redundancy. Let's have a look at this one from FT Reader RW. He says, self-employed people earning 1 penny over £50,000 over the last 3 years are not eligible for the government self-employment grant. Is there any chance this will change? What channels can self-employed people use to lobby for fairer treatment? Well, great question. Is there any chance this will change? Well, we hope so. Certainly lots of people are lobbying for it, and lots of people are writing to their MPs. Now, obviously Parliament isn't functioning as it normally does at present, but lots of the feedback I'm getting from readers is that MPs are receptive to constituents' concerns. Certainly a couple of readers have been in touch with me over the weekend with letters that they've written to their MP, and then they've emailed me again today and said that they've heard back and that this has given them cause for hope. Other things that can be done, well, there are various different trade unions that represent different business groups. There are lots of people, for example, from within the TV and film industry who entirely reliant on freelancers. Those freelancers routinely have to set themselves up as limited companies in order to deal with the big media players, and certainly lots of those organisations, Beck2, there are others, are putting forward pretty comprehensive arguments to say if you do nothing and let this situation persist, then lots and lots of people are going to be left out of pocket. This is going to create a big problem for this particular industry. So maybe there's an industry lobby group. Obviously, the FT will continue to write and talk about these matters. Now, next question comes in from Christopher Welch, and he asks, "Hi Claire, I got made redundant last month. I'm sorry to hear that, Christopher. Terrible timing. I just got the statutory minimum payment and no options for furlough. So moving towards setting up as a freelancer and being self-employed in the data/fintech space. Are there any government schemes out there to help those who are trying to start small companies right now?" Well, interesting that you should say that, Chris, because small startups, there was a story on ft.com this morning, which I'll tweet out after I finish this YouTube broadcast if you can't find it, talking about how the startup economy is just going to be changed beyond all recognition by this crisis. Certainly with smaller startup companies that have investors, those investors are invariably going to be tapped for more cash. But for somebody in your situation, if we were talking about this 3 months ago or 6 months ago, before the coronavirus crisis had happened, then you might have looked to crowdfunding platforms if you had a brilliant idea. That's one way that certainly in the personal finance section, retail investors have been very eager in past times to put money into companies that they think have got a really great idea in search of a return. But unfortunately, as I'm sure you can imagine, lots of those sorts of retail investors have really pulled their horns in right now. Now, one option that you might not be available, that you might not be aware of, is that for people who've been redundant or let go by a company, the government did publish some guidance over the weekend saying that if a company that had let you go was to rehire you again, then they could apply to then furlough your pay through the PAYE 80% scheme. Now, in practice, again, I'm happy to take your comments on this, but to my mind, it doesn't really sound like something that a lot of companies are going to want to do, go through the hassle of contacting people who they've let go, taking them back on their books, taking on the admin of then applying and forward funding that pay until such time that they get the money back. But then depending on your own circumstances, Chris, maybe that could be an option for you, and it's worth talking to your employer. Otherwise, I wish you luck. Another question here. Selem asks, "Hi Claire, my partner resigned from her job in early February and was about to take another one towards the end of March. She works in the travel industry." Oh dear, this doesn't sound good, Selem. "Sadly, the new position was withdrawn and her previous company had already accepted her resignation and issued a P45. What are her options at the moment, as she has no income from the 1st of April and it looks highly unlikely that this will change anytime soon, given the situation within travel and tourism?" Well, Selem, I covered part of the answer in my previous question, and I will tweet out the links to the government guidance page on this suggestion that a previous employer can take back on a member of staff that they had let go and then apply to furlough them. It's definitely worth your wife asking her former employer if they would consider to do that. Otherwise, what could she do? Well, she could try and apply for a job somewhere else in a different industry. Not that that would necessarily get her any income coming in any quicker. Otherwise, you're looking at the benefit system. Now, in FT Money at the weekend, I co-wrote with Lindsay Cook a very big piece looking at your financial rights, who can claim benefits, what type of benefits are available to you. And the two main ones to consider would be job seekers allowance. Now, if you are claiming the new style job seekers allowance, then that is a lot more flexible in terms of what your partner can earn and what savings you can have while being supported on that benefit. The downside is it's not very much money. I think from memory, about £72 a week, but you can still claim it in many cases. The problem with universal credit that lots of readers are finding who've been emailing me in is that if you have savings of more than £16,000, either yourself or in partnership with somebody who you live with, a couple, then you're not eligible to claim. And also if your partner is working, that can also affect your ability to claim. So lots of people are finding that there's not much money out there for them to claim. Another question coming in from John Robotham. Hello, John. He asks, it's still not clear to me what furloughed directors can do. Is paying bills, including wages, a statutory duty, or just paying the government? Now, John, this is a really interesting question because playing devil's advocate here, if I was a company director and I thought, well, I'm going to furlough myself because this is the only chance I've got of making any rescue money from the government, the business is going to fold otherwise. I'll be able to secure however much I am going to get, £500 or £600 a month. And now, under the rules of the scheme, I'm not supposed to do anything more than my statutory and administrative duties as a director. So, what exactly does that involve? But also, how is the government going to check up on these people? I'm not saying that you should break the law. I'm just saying, how are they going to know if you're continuing to respond to emails from people who might want to, to seek work from your company, or dealing with creditors, or trying to deal with suppliers, which is a really big problem for lots of the limited company directors who are so urgently seeking help because they've still got to maintain all of the expenses of their business. They've still got to pay salaries. They've still got to, pay the rental commitments on, properties that they're renting, equipment that they're hiring, vehicles. The list goes on and on. So, in terms of the specifics of what administrative and statutory duties means, there was a little bit of extra information that popped up on the HMRC webpage, which again I'll tweet out after this session goes off air, which was spelling out that if there was more than one director, people would have to vote to make sure that the director who was furloughed understood what their diminished responsibilities would be. But if it's just you, if you're a solo company director, then I do appreciate it's very, very difficult, and very difficult, frankly, for the government to tell what you are doing. But a very good question, John. Thank you very much. What else do we have here? We have a question from Firefly, who asks, what would be a simple solution, Claire, that you would suggest to policymakers in response to the government's claim that it's too hard to calculate or differentiate directors' income dividends taken from their small limited company? Well, thank you for asking that, Firefly. I think in this area, simple solution unfortunately doesn't exist. It is a real problem within the UK tax system, which is, hugely difficult. As you know, there are all of these rules that the Treasury has had to very bravely try and negotiate when creating these different schemes. And I think that one of the biggest problems for them with the director dividend issue is that it kind of falls into the bucket of too complicated. Now, as I was saying earlier, on your tax return, the space that you get to declare your dividends is the total of any dividends that you've received from like shares that you might happen to hold, and dividend income that you've received from your own company. And you may not be the only director. There may be other directors who are getting a slice of that dividend income. So the solution for that is, while the government can't know at a top level what that is, your accountant could tell them. Now, there's an SA 302 form, which people who are self-employed or directors of limited companies would use as like proof of income to a mortgage company if they were applying for finance, or anything like that. But that even doesn't break down the specifics, but a covering letter from an accountant and a page of the relevant accounts from that company would obviously make that distinction clear. But the problem for the government is that that's a huge amount of admin. If they're trying to devise a process for people to be able to apply for things and for forms to be checked before the money is paid out, then that's obviously quite a lot of things to check, quite a lot of things for accountants to do. Another problem that was raised with me earlier on by Emma Adjumang, our tax correspondent, is if HMRC are sending letters through the post to business premises, if you're working from home, as most of us are, then you're not going to be there to get the post to that business premises, which is another worry for the future. I'm aware that doesn't answer your question, but that is basically where we stand. John Redwood's solution, of course, is give the money first, ask questions later. In summary, it would be better to throw money at saving businesses rather than having to pick up the cost of the businesses going bust, or the staff being claiming benefits afterwards, which is an interesting solution. But there's really not much time to debate this because companies are facing these impossible financial demands as it is. And if the debate goes on for too much, then there are not going to be companies to save. Danny Healy asks, I am a shop in Hatton Garden, very nice Hatton Garden, which has business rates of £82,000 a year before rate relief kicks in, so I do not get a business rates relief grant. I am the sole director of my company, so I do not qualify for help there. I have been told there is no help available from the government. Is there any help for sole directors paying more than the 51,000 limit on business rates? Well, Danny, as we were discussing earlier on, I mean, the only help that sole directors of a company can legitimately claim is under the job retention scheme. They could furlough themselves, the PAYE element of their pay, which is normally around £700 or £800 a month, because that's the way accountants structure things, so that you have a small income coming in every month that's below the personal allowance, and then you can take a dividend for income that will balance out the peaks and the troughs of your business. Now, again, if you furlough the PAYE element of your pay, then under the current rules of that scheme, you can't do any work for that company. Even if you are a director, you're limited to your statutory and administrative duties as a director rather than working for the company. So this really is a significant black hole. I'm sorry to hear that you fall into the business rates black hole as well. I've had various emails from different retail businesses in London. In fact, over the weekend, who say just by dint of the fact that they're in London, their business rates bills are higher, so they don't come into that cap on business rates that will help different retailers, restaurants, etc. Okay, one final question here from Sam, which I will ask unless I get any really good ones coming in the next few minutes. Sam says, I work as a consultant through a limited company, which I'm the sole director of. I pay myself a mixture of dividends and salary from the limited company. Since the travel ban, I've not been able to travel to consult on projects, resulting in a complete loss of all contracts and income until countries lift restrictions. Am I entitled to the grant paid to the self-employed based on my dividend/salary income? Well, I'll address this in a few different parts, Sam. Firstly, even though every single limited company director in your situation who I speak to classifies themselves, kind of spiritually, you could say, as self-employed, technically, as the director of a limited company, you're not eligible for the government's self-employed scheme because you have a mixture of PAYE and dividends, which you take your income from through the company. So they define self-employed as people who are sole traders, who put in a tax return, have quite simple tax affairs. So you're not entitled to anything under the self-employed scheme. However, the PAYE element of your pay, you could technically apply to furlough yourself under the government's job retention scheme, whereby you can get 80% of your pay for 3 months, but it would be that small element that you classify as PAYE. But in terms of would you be entitled to do that? Well, certainly, because you can't do business, you can't travel, you can't do any work. That's what it's for. So my advice would be speak to your accountant and see how much that would be, whether you think it's worthwhile doing. Okay, well, I think that is just about it for questions in the meantime. So I'm going to wrap up for the day. It's always really, really lovely to hear from FT readers, even though many of you are in a position of crisis at the moment. We want to do what we can to help. As reporters, we're there to knock on doors, to ask the questions that people don't want asked, and to generally make a nuisance of ourselves on your behalf. So I would urge you, if there's something else that you would like us to look into, something you would like us to consider, we do look at all of your emails, even though I might not have time to reply to all of them, but you can get in touch with me via the Money Team email address. It's a very easy one to remember, money@ft.com. I'll say it again, money@ft.com. If you want to follow me on Twitter, where I will be tweeting out any articles that we publish or that my colleagues Chris Giles and Dan Thomas and the parliamentary reporting team are publishing on these issues, you can follow me. My Twitter handle is @ClaerB. Claer is spelled C-L-A-E-R. One of these days I'll tell you why I spell it like that. In the meantime, thank you very much for joining me today, and I hope to see you back here soon on the next FT Live video.